Hello, G Money Junkies. I'm here with my coffee. This time I got no heavy cream, so my voice doesn't get all raspy as I talk for 10 to 20 minutes here. But today I want to go through my current trades, and I want to talk about my Qualcomm trade because that's the one that's expiring today, and I got to figure out what to do with this thing. And so I have some ideas, so let's go ahead and get started. So you might think, why does he have a cup with flowers on it? Or at least my son asks me that. These aren't flowers, these are actually, I have no idea what these are. Cranberries or, what do you call them? They're Christmas, it's a Christmas mug. Actually, it's a January mug. So anyways, I think they have the Christmas motif on here, but they're not flowers, so you don't have to worry about me. I'm good. These are not flowers. All right, so let's go ahead and jump into the Tastyworks software and examine some of these trades. So I'll get to Qualcomm right now since we got about an hour left in the trading day. And here's what I wanted to do. So at some point a couple days ago, let's look at my history. Some point a couple days ago, I actually bought back my call for a whole $1. That was awesome. So I sold my call for, I forget, maybe $50 or $60, and I was able to buy it back for about $1 plus resort fees, as Tom Sosnov likes to call them. So I made a 99% profit on that, and then on this one, I tried to sell this, and I've been trying for a couple days, but no one's biting because Qualcomm is not going to reach $58 in the next 55 minutes. And people knew that for the last few days, so they're not going to pay anything for this. And if you look at this, the natural mid price is 0, and there is no liquidity for this one. So no one's bidding anything, and this is probably me. I'm probably the only guy out there who actually has anything left. Oh, actually, that's not true. There's quite a few people who have this call option, but I had expected this to be a loss because I bought that only for protection on the upside. So just in case Qualcomm shot through 58, I would have actually still had a profit because my put would have been worth nothing at that point. And my strikes were 57.5, 57.5 on the short, and then 58 on the long. So that's a 50-cent wide margin. And I had collected, I actually don't remember what I collected because right here is just showing 27. But if I look here, and I can tell that I had collected about 90, about 70. So I had collected somewhere in the neighborhood of 70 cents. So on the upside, I would have profited about 20 cents. But what happened is it's actually gone down, and it's because of this lawsuit between Apple and Qualcomm. Apple's suing Qualcomm, and that's hurt Qualcomm in the short term, but I think over the long term, this is a good company. So I could do a couple things. I could just take delivery of the stock. I would end up getting a purchase price of 57.5, and then you subtract out the premium that I had, which was about 70 cents. So I believe it was about actually 75 cents. So let's pull out my trusty calculator. So, and you can do this in your head, but I'm just showing it here. 57.5 minus, let's say 70 cents in premium. So this would be my cost basis, 56.8. So I'm running basically 40-cent loss right now. So not a big deal. Qualcomm should go back up. So I have a couple options I can do. As far as this, I have a order here to see if anybody would be willing to buy it. And actually last week, I will show you this. This was amazing. This one right here. someone actually did buy it for $1. There was no way Qualcomm was going to be at 59 by the end of that day, and someone still bought it for $1. Thank you. Whoever that was, thank you. All right. So I placed this trade here just in case someone doesn't know what they're doing, or two, wants to buy a lottery ticket. And I'm talking, 36 million to 1 odds. There are those people out there. You can buy this off me for $1. All right, so now let's go to the short put, which I had sold for. Let's see, I had sold this for 53. Now it's 100 and minus 112. So I basically have lost $59, $58 on this. So I can just go ahead and buy it back, and the whole trade ends up being a loss. But I don't want to do that. So what I put an order for is to roll it. And if we look at this here, the roll is to next week, go out 1 week, and I was asking for 20 cents net credit. So what that means is, if we go back here, right now to buy it back, I would need to pay somewhere in the neighborhood of $1.13, $1.14. And then next week's, I would get back $1.20. So there's about an 8-cent net credit. And I tried to put 20 cents earlier in the day, but there's just no, there's not enough width or enough credit there to make this worthwhile. So what I'm going to do is I'm going to cancel that. So let's go ahead and cancel this. All right, I am out. And I have 50 minutes, so let's do a quick roll and highlight this and then roll it out 1 expiration week. Look at that. What happened here? April 21st. Did I really capture that much more credit? Oh, because it's after earnings. Well, there you go. So I can take the risk of going out after earnings, and I'm not going to do that. So let's go ahead and just roll it to next week. Collect the 8 cents. How about that? The other thing I can do, let's see, what's the other thing I can do? If I go out 2 weeks, so $1.10, and I go out 2 weeks, and I can actually bring this down to 56 for $1.10, and then I'd be playing earnings. But what's the likelihood of Qualcomm really cratering during earnings? So let's look at 1 year daily. So we're looking at 53, and the last time it was 53 was about a year ago. Let's go out 2 years. And it won't let me go out 2 years. Let's go out weekly by 2 years. All right, so 56, what's that? That's about the midpoint right there. So I can actually do that. And I might be able to catch some theta decay and try to get out of Qualcomm before earnings. And let me pull up my browser here and try to find out when earnings are. And I just realized I left the calculator up. Sorry about that. All right, 419 after market close. So that would give me an expiration, or that expiration is the 21st. So that's a Friday. So we're talking Wednesday evening. So I would want to get out of this before Wednesday evening, or here, I got a better idea. All right, I got a better idea. And I'm doing this on the fly, so I hope this isn't too boring that I'm doing this on the fly. So what I'm going to do is I'm going to roll this out to earnings. So I'm going to do an earnings play on Qualcomm. Yes, I'm going to be adventurous. So let's go out 1 extra week and bring it down to 56.5. So I collect 22 cents. All right, so 22 cents, yes. So let's go ahead and do that. 22 credit. Not bad, but I'm also collecting $100 worth of value because I'm lowering my strike by $1. So I can either get assigned tomorrow and I'd be getting this at a 57.5 cost basis, or I can roll it out 2 weeks and get it at a 56.5 cost basis, plus all the credit that I've already received. All right, so I need to remember to bring these windows down. All right, sorry about that. All right, so if you look here, this is the one I have to buy back, and then this is the one that I'm going to sell. So I get a 22. Let's do 22 cent credit plus my 70 some odd cents credit. So I will have a total almost a dollar credit, and I'm lowering my strike down to 56.5. So if I am assigned 2 weeks from now, my actual cost basis will be 55.5 because of all the credit I received and my lowered strike. So I'm going to go ahead and send this. Let's make sure I can get filled at 22. I think I can. And then what I'm going to do on top of that is, once this gets filled, I want to do a call vertical, but I want to, let's bring it to 56.5. So I want to sell the 56.5 and buy the 50. Well, I'm not going to collect enough. I just will not collect enough here. Because if I get the other one for 22, then I need to collect enough here to cover $1 or 50 cents. And I'm not 22 plus 23 is 45. So I'll have 5 cents upside risk. Here I'll have 40 cents upside risk. So there's just not enough here. But if I go down to 56, no, then I'm baking in a loss. So I don't want to do that. All right, so I don't want to sell a call spread. I'm just not going to do that. So that was my idea. I was gonna roll the put and then basically create a jade or big lizard on top of that, but I'm not able to collect enough. So I may have to just take the 21. We'll see. Now it's down to 20. All right, so that's Qualcomm, and then been looking at Honeywell. Honeywell went down quite a bit before, but now it's recovered. So now I'm at a almost 21% gain. And I want to take this off eventually. The earnings date is after April 21st. So I still have some time. But I do want to capture that 25% gain there. Now GM, what I did today is actually yesterday or a few days ago, April 4th, I actually sold 2 calls at 56 cents. And then GM went down, so I went ahead and I bought them back. So I made about 20 some odd dollars. So what I'm going to do is I'm going to wait till GM goes back up and then sell another call at 36. And it's only because of Tastyworks that I'm able to get in and out of these positions for cheap, because it's $1 to buy a contract and it's free to close, and then the junk fees that all the exchanges charge. But if I can spend $2 in commission and make $25 in 2 days, and then wait for GM to go back up and then make another $25, and you just keep doing that over time, you're just gonna reduce your cost basis on the stock. So I'm at $100 and some odd loss, and I've already recaptured maybe about 20% of that loss in the last couple of days by selling this call. So that is awesome. So I want to sell a call eventually back on this. And then Gilead, just it's been struggling below my break even, but I saw 14 days, so I'm still waiting on that. And my goal, or my game plan there is, I will probably, if Gilead recovers to 68 or 68 and a half in the next couple weeks, then what I'll do is I'll just close out the whole trade. If it doesn't, then I'll just roll the put out. And just for kicks, let's see what a put out to May would be. A put out to May. Don't have enough strikes here. Here we go. So put out to May 19th would collect me another 82 cents. So collecting another 82 cents when I'm at a 67 break even, that would bring me down to 66 and 18 cents break even. And then I would be well within the current price, assuming that it doesn't go down further. But this is a multi-year low. I believe the actual low is about 65. So I think I'm at the bottom range of Gilead, and I'm basically selling puts, and that's perfectly fine by me. All right, so we talked about GM, Honeywell, Gilead, IBM. So IBM is, I wanted to go back up to 175 because this is a put ratio spread, and this is where the maximum profit's going to be. So I wanted to get back up there. I'm running about $100 loss because I sold it for 145. To buy it back would be 242, and I've got plenty of time. Got a month and a half, so we'll just sit tight on that. And then Walmart. So Walmart's actually gone my way in a good way. So I collected, this was 93 cents. So I collected 93 cents per share. That's per share. And then on my upside, I have 50 cent width. So I have a 43 cent profit if it goes above 73 cents, and it's locked at 43 cents at expiration. So one thing I can do is, once I get to $100 or 50 cents profit on the put, then I can I can buy back the put, and then I have no loss on the call spread. It will be impossible for me to lose. So if I buy the put spread, or the put back for $100 gain, then the most I can lose is 0, and the most I can gain is 0. But I would want to gain something, so I would probably buy the put back at maybe $100 and maybe $20 gain. So right now, let's see. Oh, this is net liquidation. Here we go. Profit and loss. So once this hits $120, then I've locked in a $20 gain. No matter what happens, $20 is mine. And then I can gain more if Walmart goes below 72.5. Once it goes below 72.5, I capture this spread as a gain. So we'll just sit tight on Walmart. I got 2 more weeks, and we'll see how that goes. And then let's look for another trade here. I do want to get back into something, and it's half an hour, so let's look at high options. No, let's just look here. Watch list. And then let's look at those that have high volume, and then IV rank, that's high enough. And then let's look for something that I know is a good company. So Macy's is interesting. Now the future retail is just so in doubt, and Macy's is one of those that's shuttering a bunch of stores, and I don't know what its future is going to be. Here's Ford with a high IV rank. That's interesting. So let's look at Ford, Macy's. Microsoft has a high IV rank. And then where do I get to earnings? Earnings is April 27th. That's why. That's why it has a high IV rank. So let's look a week before then. It's just not a lot of premium there. All the premium is in the next week after that. So let's just stay away from that for now. GM is up there. And I wish I could trade Google, but it's just, I mean, the capital required or the buying power reduction is so ridiculous on that. So if I did a Iron Condor, just I could do that, but I just don't want to right now. So let's look at something else. Whole Foods. Okay, I've been trying to get into Whole Foods forever. May 10th. So let's try again. Let's see what we can do here. So we're at 3105 now. So this has just been climbing up and up over the last couple weeks. So let's do 3 weeks, 5 minutes. This is a couple days, but that's okay. So it went up to 31.5. Interesting. So let's see what we can do here. If I can sell, that's 41. So here I have a 58 cent credit. My break even would be 30, even though I was trying for a break even of 28.5 last time. Let's do this. 31. So collect $1.01. And the break even would still be 30. But let's do this. That's better. Okay, so my break even on the downside would be 30, and then I would collect 7 cents on the upside. But this gives me a larger margin to not have to manage. So I have $1 between these two strikes where I don't have to manage, and I can let it expire. When you have a big lizard like this and you're trying to manage a straddle, one of these is always going to be in the money, and that just causes a little more headaches. So let's do it this way. If it expires in the middle, I'll collect 57 cents. But I'm not going to carry this to expiration. What I will do is try to manage it at 25 cents. So here we go. 57 cent credit. That's just not enough. So let's up the quantity. All right, so $114 credit. So if it goes up, let's look here. So if it goes up, I'm going to be in the green, and I will have no upside risk, and I'll keep $7. But after commissions, it's really like $2 or $3. That's okay. It's worth trying this. And if it goes down a little bit, which it just might, well, I'm actually in that range right now. So let's go ahead and send this $114, and it's working. All right, so I've been looking to get into Whole Foods for a little while. And then anything else here? Gotta remember, I brought my coffee for a reason. I just don't see anything else. Maybe Starbucks has a high IV rank. Let's take a look at anything that we have here that we can play with. Maybe before earnings. Let's see, let's do this. Bring, I think I messed that up. All right. So I can collect no upside risk, and then my break even would be 57. That's not too bad. And then let's bring all these out to after earnings. And when did it say earnings was? Earnings was April 27th. So it'd be the Thursday. So we can do this. So if I have a $1 wide strike here, actually I'd prefer to bring this down. Okay, 113. So my break even on the downside would be 56. On the upside, I would collect 13 cents. And I always check this to make sure this is all green up here. And I'm happy with that. And I'm going to go ahead and send this. So on the upside, ooh, some of these are really wide. Ouch. Let's try to up this to 120. That might not get filled, and that's okay. All right, so next week I'll do another show. You can see whether this got filled, and I'll update you on what happens. Actually, I'm a little worried now because this is not filling, so maybe I need to. Let's just go ahead because I got half an hour left. So, which one am I looking at? This one, replace. I'm not really worried. If I was assigned the stock, I would be okay. And I wonder why. It's taking a while. Because usually the mid price you should get filled pretty quickly. So April 21st, 56.5. This is the put side. And this is probably why. I could actually do it for break even. There's a lot more liquidity there. More open interest. Let's look at the volume. Volume. So there's a lot more volume at 56. So I could just do that. Maybe I can replace the order. Let's just cancel this. Cancel. All right. And quick roll. Bring you down. Hey. What is going on? Okay, let's bring you down. Come on. All right. Let's clear everything. Go back here. Quick roll. And then on the 21st, oh, it's on the 13th. Bring you down to 56. And they're going to ask me for debit, which I don't want to do. I do not want to do that. I'm at 57.5. But in order to get filled, maybe I need to. So let's just bring this down to 19. Let's just try 20. It's illiquid, but we'll see. We can probably get it done. Get her done. All right, next time. Until then, keep trading.